Hey guys, how's it going? This is Criss. Hey, so I get a lot of questions. How does the whole loan process work? Who's Fannie Mae and this Freddie guy? Like Fannie and who names themselves any of that anyway, right? And who's Jenny? I've heard of Jenny, but we know Sally does student loans, but who's this Jenny, Fannie, and Freddie? How do they fit? So what this video is going to do is really just kind of give you some basic terminology on how the process works from application all the way to the investor. So I hope you guys enjoy this. It's actually some pretty good info if you're going to buy a house. So here's the scoop. The borrower works with a loan officer. The loan officer generally gets some basic information, borrower goals, and says, okay, well, I got to pre-approve you. How do they pre-approve? Well, the loan officer takes a look at a bunch of guidelines, a bunch of rules. So each borrower for each type of loan has to fit a specific number of rules. So for instance, if you were doing a VA loan, you have to be a veteran or active military. And so it's part of the VA's guidelines that you have to be active military or a veteran. There's some other exclusions too, but in order to do a VA loan. Okay, FHA loan has their own rules. Conventional loans have their own rules. So these rules are called guidelines. Okay, so what happens is the loan officer pre-approves the borrower based on their interpretation of a bunch of guidelines. Now, once you're going in escrow, then the loan officer is going to hand over the case to the underwriter. The underwriter is going to, again, review those same guidelines to make sure that borrower fits that box of rules, those requirements. Now, once the underwriter says, okay, borrower meets all of the rules, guidelines are taken care of, well, the underwriter is then going to have, the borrower is going to have access to the bank's money. But the thing is, before any bank is going to hand off hundreds of thousands of dollars, they're going to make that borrower sign a promise or a commitment to repay. That repayment is known as a promissory note, but it's also known as a bond. Okay, I promise to repay this loan over so much time, that's a bond. Anyway, but what you're looking at right now is what most consumers know if they've ever gotten a loan. Okay, I, the borrower, worked with the loan officer. There was a bunch of rules that they had to make sure, and we met the requirements. We had to provide paperwork to prove we fit all of these requirements. Then we had to, once we were in escrow, deal with an underwriter who wanted even more paperwork. And then once the underwriter was satisfied that we met all of the requirements, then we had to go sign a bunch of paper for about an hour. And then after we signed all of that paperwork, we got the money and we were able to buy our house. Okay, that's what people know. But what goes on the back end? Okay, well, you figure first off, you have to understand no bank has enough money to fund millions of dollars a day and then wait 30 years for it to be repaid. Okay, it's a liquidity issue. They run out of money. Okay, so what do banks do? Well, you've probably heard of Fannie Mae, Freddie Mac, and Ginnie. Okay, so Fannie, Freddie, and Ginnie. So, and if you've heard of Fannie and Freddie and Ginnie, combined, these three entities do almost all the mortgages, residential mortgages in the United States. So you figure if Starbucks did almost all of the coffee in the United States, you would think Starbucks would probably be even more so on every corner than what they are already. But if you've noticed, you probably haven't seen a Fannie Mae, Freddie Mac, or a Ginnie Mae on your street corner. Why? Well, kind of like the bank's the middleman, okay? The bank's really just fronting the money for a piece of paper, and then what the bank's going to do is trade that piece of paper to get more money back. That way they have the money to hand off to the next person. I hope that makes sense. So what do Fannie and Freddie end up with? What do they want? They want this bond, because that's what they do. Fannie, Freddie, and Ginnie, they are in the securitization business. So what they do is they get bonds from banks, and then investors buy those bonds and sell those bonds. Okay, so what Freddie and Fannie and Ginnie do is they're just kind of a middleman between the bank and the investor. Okay, but what's happening here is, if you're an investor, do you want to just buy any old bond? Heck no, right? You want to get your money's worth. You want to make sure it's a good investment. So what Fannie and Freddie and Ginnie really do is they also create the rules for these bonds, the guidelines. Okay, so as the investors are buying and selling them, the investors want to know that those bonds are secure, that money isn't just being handed out to anybody that asks for it, that there's specific requirements which puts the investor in a place of protection. And that's really what they want with their money, just like you would if you were investing your money. But what you have to understand is those investors are constantly buying and selling those bonds. And that's what makes interest rates go up and down. So there'll be a link at the end of this video for Mortgage Bonds 101. It'll give you more details about that. But But this is the key. This is the key view. Like this is what really happens. So whether you're buying a house in Florida, you're buying a house in Alaska, you're buying a house using me as your finance or someone else, it all works about the same, guys. So, and the funny thing about the whole deal is it all goes to pretty much the same three places. So, one thing that I would like to recommend, definitely consider this if you're getting a pre-approval. Ask your loan officer, hey, thanks for the pre-approval, but do I have an AUS approval? AUS stands for Automated Underwriting System. This is really important, guys. This allows the loan officer to actually take your credit report as well as the scenario. So like I want to buy a house for 300,000 and put 10% down and my income is this much and I have this much in the bank and blah, 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 blah. The loan officer can submit that scenario electronically, securely to Fannie and Freddie's automated underwriting system. It'll then review it and it'll kick back an approval or a refer. So if it kicks back an approval, high fives, as long as you can substantiate all of the items that were on the loan application and make sure you meet the guidelines that the AUS couldn't see, you're going to get an approval. And that makes your underwriting process much faster and much easier because a bank, an underwriter, at the end of the day, they just want to know that you qualify, that Fannie, Freddie, and Ginnie, that you meet their requirements. That way the bank doesn't get stuck with a piece of paper and doesn't get their money back from Fannie, Freddie, or Ginnie. Okay? So that's really the thing you want to watch out for. Ask your loan officer if they ran an automated underwriting approval on you, and that will also probably help you if you're competing against various offers. It'll help you with maybe a leg up on the competition. Anyway, that's it. That gives you a mortgage overview on how mortgages work all the way from application to investor. I hope you guys enjoyed it. Please hit that like button before you go. We'd love to hear your comments. You can leave your comments down below. And if you have anything you want to add or experiences, we'd love to hear from you. Also on this page, if you click on the ugly guy, I don't know who that is, but that will subscribe you to the Mortgage Rate Watch. So it's just basically twice a week, a release on what's happening with mortgage-backed securities, how they're trading, and how that impacts you as a consumer. Also, you'll see some other links on this page. Check out Mortgage Bonds 101 is a great thing to check out. Kind of gives you some basics about how mortgage-backed securities trade, how it works, and how that impacts you. Anyway, that's it for now, guys. Hope you enjoyed it. Take care. Bye-bye.